All right, so this is Ken Long from the weekend trading report and coaching session. This is December 12th, 2015. We're going to take a look at a half a dozen trades from this week and see what it is that we can see. All right, so this is another one of Sonal's very beautiful charts. And she's doing a hybrid frog here. The frog box, the risk box, is this purple box. And then this was the tightest squeeze in the Z3 pinch, the distance between the +3 and the -3 Bollinger Bands. And so this had compressed to less than 70%, so 69% of the frog box, and then started to get wider. She gets long like we're supposed to here. It oscillates around. She decides to take this exit here. Um, the uh, the learning point on this is that because the frog box we define as noise and the pinch box by definition is going to be within the noise, um, when it moves outside of that pinched noise box, this would be a place in which we could get short. And I think she got short and she covered here at this green dot and made this trade. She wanted to cash right here. That would have been a winning trade. This other one was a winning trade too. But she has been working on staying in the trade longer. I have no problem with that exit. So where you have a trade that's almost 1.0 and at least cashes for a micro win, that's fine. What I want to show is that my coaching notes for these blue circles. That's my indicator for a coaching moment. Um, just some things to notice. Here was a potential long entry because we have a Z3 and we have the price and the 10 crossing through the dragon and leaving. So this is a place where we can get long with a stop here. In this spike north, there's an opportunity in here to gather some hay, a positive trade in here for sure. Um, the next circle says after this run up, which is not uncommon in the currencies. I think, as we've seen, you got to grab them when you can in the currencies because so many of these spikes tend to fail. This is a place to get back short as price rolls over and the 10 departs the dragon on the downside. This is a place where you can get short. That's what that circle is. It shows the RL regression line crossing the dragon, RLXD as we would say. You can see the dragon rolled up and then he rolled over, and here's where the 10 comes out. This is a place where you can get short. This is a second place where you can get short, especially when it takes out this previous low of the day. This is a Z3 move as well. Here's an RLXD. Now the price has the RL10 has left the river. You could actually get long here and long here. This would have been a massive good win. On an entry in this blue circle, the exit that's indicated is here, and that's when the dragon has rolled over. You notice the dragon is that red shaded area, and the RL10 crosses over the 30 and then departs the dragon on the downside. This is the place definitively where this long side move is over. This is the dominant trade, probably 3R in my judgment, in the way we normally trade that. All right, so the next one up, this is also one of Sonal's charts. Here's the frog box. Here's the pinch box. This is a second pinch box, which she's using as an estimate of a 1R win. She gets long here. She stops and reverses and then covers here, which makes this about a wash. What I want to point out here from a coaching perspective is, again, in this location, but certainly not later than here, what you have is a new low of the day. You have an RLXD leaving the river and the trend is down. This is a place where you can get short. This is a place where you can get short if you're short here and you cover here, you have to get short here not later than this, or if this didn't shake you out, and it wouldn't if you were using the 90 or the Bollinger Band 30, the RL90 or the Bollinger Band 30. But even if you did get out in here, this is where you have to get short again because it's a new low of the day, and the RL10 got rejected by the edge of the dragon. If this didn't get you out, this is a place to get a second position short. You might have even tried a third position short here, depending on what your entries were on the and your initial risks. I like to use the top of the Bollinger Band as my risk framing. And so any short in this area, you have to have that covered by the time you get the RLXD coming through the dragon. And so this would be your natural, not later than exit point. Somewhere in here, one of those 5 up bars, you're probably making a buy to cover. All right, this was a rapid frame I did from my tablet while I was in the back of the classroom on a break, and so what this really shows is you don't have to be all that sophisticated. I'm looking at a 5-day look back, and these are like 5-minute charts, and I've noticed a support level over here at about 205. And I see that the price has just opened and started to hook up, and I'm looking at the top of the channel being around 210. So I've got about $4 to play with, and so intraday I had some support here. There was a sell-off, and then finding support and moving up. So I'm getting long at 206.34 inside that blue circle with a 50-cent stop, which would be down just below this solid line. Where I want to definitely be short with 2 scoops is below this 205, because if this 5-day low doesn't hold, then this is going to be a massive move down. It turned out that that's a true statement. But this was a long position intraday. This is what that looks like now zoomed into the intraday using that same tablet and the primitive markup here. So what we had that morning was big gap down, sell off, a 1, 2, 3 entry at 206.34 with a 50-cent excuse me, 50-cent initial risk. In a matter of about 3 minutes, we get a move up above 20 or 206.65. I get to no lose plus dinner for 2 shortly thereafter. It gets up around 207 and starts to roll over, and we cash that one for about 1.5 R. And about 3 minutes of open risk where I have my risk here, and I get 5 minutes of moves in my direction, and I get to no lose plus dinner for 2. So I'm going to be able to cash at least $100 after the round trip on that one. This is a beauty from Sunal. This was her frog box, her pinch box. She gets long here. On this extension, she raises her stop from the bottom of the wrist box to below here. It moves up to here. She takes this as the winning position right here. She was looking here that if she had not taken that, where are some levels at which she might have had some other stops. But she cashes this one, and then she's going to re-enter here on a new high of the day, and really this is an RLXT back to the upside and cashing one here. So 2 very nice trades for more than an R each. Well done using risk management. Notice the range expansion to the upside and how that dragon acts as a very nice noise barrier to help us get on the right side of that trade. Here's one from Jeff with the ambush, and what he likes to do on this is buy a dual position, so he's simultaneously long and short, and then he cashes the one that's failing, and in this case he gets the long position from here to here. Trade 2 is a almost 4R. And then the first trade had a little bit of slippage. He normally takes a minus 0.5 R loss on the losing trade when it's pinched like this. But with a little bit of slippage, he gets minus 0.8, and so he nets 3.1. And this is in the Dow Minis. So this one happens all the time, all the time. All done for 3R. He's got that automated now. Here's another one from Sunal, another beauty trade. Here's the frog box. Here's the pinch box. Here's the expansion to the downside. This one is in the Euro-US 4X pair. She gets short here. As this thing starts failing, she brings her stop from here to here. As it rolls over, she gets to here. As it rolls over here, she gets to here. As it rolls over, she gets to here, and now she's stopped out here. And this comes in around probably, looks like about one, maybe a little more. Well done. Here's a series. I have been a hybrid frog trader with Wynn, W-Y-N-N. That's one of the frog champions. So this is the opening of the day, and so I'm using 70 cents, which is about 0.7 of a frog box in Wynn. I bracket the open with these two partial frog boxes, and I take the first breakout. And so I'm short here, and it gives me a move down to almost Z minus 3. I cover. It fails out of the dragon again. I get short. I scratch. I stop and reverse. So I'm long. I cash. I stop and reverse because this is an RLXD. I scratch. I get short. It makes a new low of the day. Makes another new low of the day. I add a second position short. It fails. The RL10 doesn't even get to the Bollinger Band mean. I take a third position short and cover here. The key on this one is using the dragon as the guide and trying to get in tune with the major move of the day. This was somewhere around 4R net out of those three positions, and this was netted about an R out of all the jockeying around here. So this was about 5R. This is later in that same trade with Wynn, and so the 5R that we just looked at occurred out of this move here. And then what we got is this, I'm noticing around lunchtime, we've got this range compression into the pinch. And so right here I notice a low. The dragon makes a higher low, and now the price is moving outside of that little pinch box. And so I like this, so I get long here with a stop at below the Bollinger Band mean. And I'm prepared at this point to get 2 scoops short around 66.75 if it violates the low of the dragon. I would add a second position up here around 67.80. By that time, with a 50-cent stop and win, I would have about almost 2R in hand if it were to break out that high. It actually got up to this level, didn't quite break through, and rolled over and came back, and so just cashed 2R later in that morning, in that afternoon on that position. So just a handful of trades to show some typical ways we're trading intraday in a sideways normal market where volatility is on the rise, and we just breached the 200-day moving average, and a critical state on short-term, mid-term, and long-term indexes. This is ideally suited for short-term intraday trading. I'm finding the hybrid frog with the champions like Wynn, WYNN, Brazil have been very rewarding here lately. So that's everything I want to cover today. Keep your risk measured and your powder dry. I'll get this last piece on these trading case studies recorded and hung on the YouTube channel for you with a link posted in the room. So take good care, and we'll see you in the chat room. This should be a very interesting week.